Hello everyone. This video is part of the accounting cycle series, and as part of the promise which I made in the journals video, I'll be picking the same journal entries and make ledger posting out of it. Do not worry if you have not watched any of the earlier videos, still you will be able to follow all of this. Next video will be on trial balance and then finally the final accounts, and all of them will be using the same journal entries. So you can link all of them. The link for all such videos will be in the I button as well as in the description box. Do check them out. Let's start with the meaning of ledgers first. Ledgers is basically an extension of journals. So journal is the first step of accounting, and then after that, ledgers will be the second level of books. It is basically the date-wise record of all transactions of a particular account. So for example, if you are making, let's say, a sales entry where you are making a sale against cash, so the journal entry will be cash account debit to sales amount. Let's say it's $100. So here cash is debited with 100 against sales. So you can create two ledgers out of it. First will be cash and second will be sales. Now with just one example you cannot understand how the ledgers will be maintained. Let's take one more example here. Let's take the opposite of the sales entry, purchase entry. Purchases are being made for $40 against cash. So here cash is being credited. So in the same ledger where earlier 100 was debited, this purchase of 40 will be credited. So ultimately resulting in a $60 debit of cash. So this will be your ledger balance. We will see this in detail when we go through the examples. We have 20 journal entries for which we'll be creating ledgers. So we have a lot of examples to understand it completely. So as I said, it is the second book of accounts because journal is the first level of entry. Contained in a T format and it consists both debits and credit sides of a particular account. Ultimately, the balances which gets out of this ledger account will help you in the preparation of final accounts as well as trial balance. The next is the format of a ledger. The format is very simple. It will have both debit and credit sides of any particular account. It will record the transaction chronologically. That's why you have to give the date columns. In particular column, you'll have to mention the account against which the particular ledger is being debited or credited. And then you have the reference column where you have to give the reference to the journals. Finally, the amount column. You have two amount columns because the first one is for debit and the second one is for credit. Now, when we go through the examples, we won't be using this full-fledged format. Rather, we'll be using a simple T format so that we can save some time while posting the data. Again, I have all the journals posted in the ledgers account readily because I want to save the time here. But I'll be taking the reference for all the journal entries and then show you that each and every particular journal line is being posted to the specific ledger account so that you can understand it better. The next is steps in creation of a ledger. The first step is record all your journals. Once your journals are recorded, half your job is done. You just have to create the ledger format and then start picking the journal lines and post it into the respective ledgers. You have to be ready with your format with all the columns, date, particular, debits, credits, and reference number. I just showed you the format in the earlier slides. The next step will be to take the journal lines and post it to the respective ledgers based on the debit and credit side amounts. Finally, once you are done, you have to calculate the balances of the ledger accounts so that you can pick them and start creating your trial balances and financial statements. So this was very simple. Now let's see how we create the ledgers practically out of the journals. So the next thing here is the practical examples. So we are using the same transactions that we used for the journals video. Here you can see all the transactions are same, and then we created the journals out of it. So we have the journals readily available now. We'll be using the same journal line items and where all these line items are being posted in the ledgers. So we have our ledgers also readily available here. We'll see each and every ledger. We'll see where all the journal line items are being individually posted. Here, as I told you, I am creating the ledgers in just simple T format. I do not have the date column here. I do not have any reference column here, and I'm not maintaining any borders or anything. The simple T format, the focus will be just to understand the process, how the numbers are being picked from the journals and posted to the ledgers. Let's start with the first entry. Here, cash account is being debited, furniture account is being debited against capital account. So let's see the figures. 100 is being debited in cash account. So let me just mark this first. Cash is marked here. We have a cash ledger account here too. The cash is highlighted or marked with green in both the sides. The second one is furniture account. So for every unique account that gets used in the journal, we'll have to create a ledger. So for even for furniture, we have a ledger here. So furniture 25 is debited against capital. So in the furniture 25 gets debited. Now if you try to understand the entry, cash and furniture both gets debited against capital. So the cash account, to try to read it, cash is the head here and capital is being put in the debit side of the cash, because ultimately cash is getting debited. So since this number is here, this means cash is getting debited against capital. So 100 is being put here and capital here means it gets credited because it's the opposite side of the entry. Same goes for the furniture account. Furniture is being debited against capital. So here two capital is being used. Now the same way, when we go to the capital account, we'll see capital is being credited. So cash and furniture will be here in the credit side of the capital account. So as you can see, 100 here is being credited for cash, and then for furniture it's 25. Let's go to the next entry. Purchases made for cash and credit. So purchase is 25. 25. Let's check the purchase ledger. Yeah, purchase 15 is being debited against cash and creditor is 10. So here also 25 is purchase, 15 is cash and 10 is creditor. So the next line item here is cash. Let's check the cash account. So the cash account, since cash account is being credited, so the amount that you can see will be in the credit side. So 15 is purchase. Now next is creditor. So creditor is being credited. So you can see the amount in the credit side of the creditor's account. This entry's posting is done. Next entry is cash sales as well as credit sales. So it's a compound entry. So cash is being debited. So the figure will be shown in the debit side. 40. Let me mark it both side. Debtor account is being used here. So a new account will be required for debtor. We do have it here. So cash debtor is being debited. All of this being is done against sales account. So let me just mark it first here. Sales will be credited against cash and debtor. So 40 is cash and debtor is 10. Next one, there is some bad debt. So bad debt is being debited. Let me mark it 2. So there should be a account for bad debt here. Yes, so bad debt got debited. Now debtor is getting credited. Let me mark it. So debtor got credited. Let's move to the next entry. Salaries and wages to cash. So salaries got debited. We have a salaries account. So it got debited against cash. So cash will be credited. Next entry is rent to accrued expense. So rent got debited here. So rent will have a new ledger. Against accrued expense. So accrued expense will also have a new ledger. Yes. So accrued expense is here and it is getting credited. So the amount is in the credit side against rent. The seventh entry here is depreciation. So depreciation getting debited against furniture. So there will be new account created, new ledger account for depreciation. So depreciation getting debited here, that's in the debit side, and furniture getting credited. Here we are not going into the meaning of the transactions because we have the journals ready. If you want to understand the transactions, go to the journal video which is there in the I button as well as in the description box. So we tick both the sides. Now next entry, petty cash to cash. So petty cash is getting debited and cash is getting credited. So let me check petty cash ledger. So petty cash getting debited and cash getting credited. Next entry, 10th one here. We are almost half done here. Bank service charge account getting debited. So one got debit here. Office supplies again got debited. Cash supplies got credited. So we will have two new ledger accounts for both these expense accounts. So bank service charge, one as debit, office supplies one debit, and cash will be credited for both. Next is computer to cash, computer purchased against cash. So two got debited to computer account. Let me find the computer account ledger. So yeah, two got debited against cash, and cash will be credited for the same. The 12th entry is cash account debit, loss in decommissioning of furniture, and then to furniture account. So 10 debit cash, debit loss, and furniture gets credited. So furniture, I have it here. Furniture 10 gets credited against cash, 10 gets credited against loss. And let me see if furniture is being cash is being debited in the furniture account. Yes, it is. Where's the loss account? Loss will also get debited against furniture. Here it is. So any chance if you miss any line entry here to post it to ledger, then only there is a chance that your trial balance will have a mismatch. Here, since we are matching each and every line, so there is no way that we miss anything easily. Bank account debit to loan account. So bank gets debited against loan, loan gets credited. So let me find bank account first. Here we have the bank account, bank is debited, and yeah, so loan getting credited against bank. So let me just mark it. Done with the 13th entry, 14th entry, loss of stock due to fire. So it getting debited. We'll have a new ledger for it, as we did not create any for it till now. If it already would have existed, then we could have used the same one. And purchase account is getting credited here, so we credit it. Charity account debit to purchase account. So purchase is already there, purchase getting credited. Let me just mark it first, and for charity there will be new account. Charity got debited. Drawings account debit to purchase. So drawings, a new account is required. Purchase already exists there, so we will be using the same one. Next entry is retained earnings to dividends payable. So retained earnings as well as dividend payables, both are new account. They have never been used till now. Let me just search them. Yes, so retained earnings, it got debited against dividend payable, and dividend payable got credited against retained earnings. 19th one, dividend account got debited. Dividend is being paid here against bank account. So dividend will be debited and bank will be credited. Finally, the last entry, creditor is being paid here, so creditor gets debited against bank account. So bank account gets credited, credit side $10 and creditor is being debited, so it's present in the debit side. I have posted all the journal entries. Let's just check it if all of them are green or not. Yes, they are all green and marked. Hence, we have posted all the journal entries, and now the next step will be to close the ledger accounts for the period. And since all the entries are being posted and there is a period closed, so let me just do it for any one account, and then we need to do the same process for all the accounts. Hence, we'll get a closing balance, and ultimately out of which we can create trial balances as well as financial accounts. So you can see these are the debits that are being made to the cash account and these are the credits. So we'll have to sum both the sides and then find a close and then find a balancing figure which will be ultimately called as the closing balance for that particular account. So here the closing balance is 190, which you can see by balance carried down 190. This 190 will be brought forward to the next period, which will be shown as the debit here. If it would have been credit, then this balance carried forward would have been this side and the balance brought forward would have been this side. Since the credit side is short, that's why the carried down figure is written here first, and ultimately it will be shown in the debit side. The same process is being followed for all the ledger accounts. You can see if something is being balanced both the sides, then there will be no balance, which will mean that the ledger does not have any balance. It is a zero balance account. The same process will have to be followed for all the ledgers, and ultimately then you can close down and then move to the next process. I hope now you have got a clear understanding how the ledgers are created. If you have any questions or queries, do let me know in the comment box and I'll be happy to help you. Thank you. Do like and subscribe if you have liked the content.